So I just got off the phone with a client, and it's pretty common these days to talk a lot about Roth conversions. So for a long time, before the Roth part of the tax code even came out, people would save pre-tax. So they would get paid by their employer, and then they would put money before taxes were taken out into a bucket. Now, what a lot of people don't realize is what you're doing is you're not saving for your retirement. If you're saving into a pre-tax bucket, you're saving for your retirement and Uncle Sam's retirement, because every dollar that you take out of that pre-tax bucket gets taxed as income when you take it out. So a lot of people know kind of instinctively that they should be doing Roth, they should be building tax-free wealth by doing conversions or some real estate qualified opportunity zone stuff, or there's cash value life insurance. There's other ways to save for a tax-free retirement. But today on this video, I just want to really talk about why. Why would you do that? Because this client that I was just talking to is in his mid-60s, and he has a friend who's doing a lot of Roth conversions. Well, I talked him down because he was pretty stressed out about all the taxes we were about to have to pay by converting hundreds of thousands of dollars of money from pre-tax to Roth. So what I want to talk about now is like really why. Why would you want to save for a tax-free retirement, save into Roth and other tax-free assets? So if I haven't met you yet, my name is Chris Reed. I'm the owner of Capital Partners Wealth Management. So this video is really just kind of, again, about the why behind the different tax treatments that you use when you're saving for retirement. So what it basically comes down to is this. If we look at a chart of tax rates in the United States, you can see that income taxes were very low. And then they peaked in the 1950s, where the top marginal tax rate was 90%. So if you were paying that top tax rate on that top dollar, every dollar that you earned at the very top came home as 10 cents to you, 90 cents to Uncle Sam. So that's not very much fun. But now if you zoom in and take a look, we're here, this is 2018, and here's the top marginal tax rate, the bottom marginal tax rate, and really these things have kind of just kept going where they are. And actually the tax cuts that lowered these numbers is about to expire, which means that I'm doing a lot of tax planning with my clients to see how we're going to adjust for this new environment if Congress doesn't renew that. Now, if you take a look historically where we've been over here and where we are now, you can see that we're actually, even though it doesn't feel like it, even though it feels like you pay a lot of taxes, we're actually, from an income tax standpoint, getting a very good deal. We're paying maybe the lowest net effective tax rate that we've ever had in this country, really since the inception of the income tax. Now, when you look at where we are from a taxation standpoint and where we are from a national debt standpoint, the government is allowed to use a different type of accounting than everyone else. Everybody else has to use generally acceptable accounting practices. The government gets to put those aside and just say, hey, well, we're only $30 trillion in national debt. The truth of the matter is it's probably closer to 60 or 70 trillion dollars in unfunded national debt. So what you have right now in this period of time is this interesting dichotomy where our taxes used to be very high and are very low now, and our debt used to be very low, but it's skyrocketed. So the one question you want to ask yourself when you're thinking about should I save for a tax-free retirement is, do I think I'm going to be in a higher or lower net effective tax bracket when I retire? So as I was just talking to this client about, because this client was 65 years old, we're probably going to get him retired here in the next 5 years. So will this line right here drastically go up in the next 5 years? Probably not. So I told him, well, yes, I am a fan of creating tax-free wealth for everybody. And yes, we have done some Roth conversions. I actually told him to just kind of get some rest tonight, not really worry about converting every single penny he has over to Roth, because the chances that income taxes skyrocket on him in the next 5 years is probably not that great. For any of you high-tech, high earners, Henry's, high earners not quite rich yet, but you're definitely going to have a whole bunch of money in the future, here's the real threat to your financial future. If we're here in 2024 and income taxes are almost as low as they've ever been, and this national debt, and unless you're an extreme optimist, probably will never come back down anywhere near Earth, the question you have to ask yourself is, if it's 2024 now, and you're retiring in 2054 or 2044, where do we think this line is going in the future? because there's only two ways the government can balance its balance sheet. They can spend less or they can take in more, and they take in more through income taxes. So in my estimation, the younger you are, the more money you make, the higher earner you are, the more you absolutely have to be fanatical about creating tax-free wealth, whether that's through mega backdoor Roths, mega Roth conversions, cash value life insurance, any kind of real estate investing. Anything you can do to create tax-free wealth is going to be huge for your financial future. Every penny that you take out of a pre-tax bucket is taxed by Uncle Sam at the time you take it out. So if you're putting away tax-free money now and you can take it out tax-free later, you're creating safety in your financial plan to make sure that you can retire on time with the lifestyle you want, live that life that you want to live, and leave a legacy for your family. Thanks for watching.